All right, thank you. Welcome to the weekly meeting, April 27th, NFP week. All right, we're 4 months, or might as well say 4 months down, right? 4 months into the new year. And some people are still having problems. And I want to kind of clean up some of the misconception or maybe some of the confusion when it comes to trading. Um, we're we're in a group that follows weekly order flow, right? We get the weekly order block. It's published. We trade the weekly order block. I know everybody is not a swing trader, right? But I am a swing trader, and that's how I view the market on a weekly basis from week to week. I use the higher time frames that kind of guide me through the flow of the market, and I try to pick a target based on the higher time frames, and we trade towards that target uh, with these weekly order blocks. And when we break swing lows, we normally pull back, right? Whether it's buying or selling, you pull back higher or you pull back lower to continue with the flow of the market. And for me, I came up with a system that kind of guides me through the market that way. And I try to impart that knowledge to you guys. And most of the time, what I find is because we all don't see the market the same way and we all don't trade the same way. Um, you take bits and pieces that make sense to you and you try to package that into a system that you already have. Uh, and the system you already have may be incomplete in more than one area. So it might take you months to figure out what's wrong with your system. So what I always try to suggest to people is take something that you know works and do that. And then you can, over time, you can tweak and work on your system, right? Um, that's what I would suggest doing. And sometimes people have an eye-opening moment, and other times they just kind of take it and pass it on. So I would like to kind of discuss and then go back and look at some of these order blocks, but kind of discuss uh, what I mean by your system is incomplete. Trading in itself, we make it sound simple, right? You understand market structure, you understand what an order block is or imbalance, or you understand where your zone is, right? Trading in itself is a simple thing, right? You buy, you sell, right? You sell when it gets high, you buy when it gets low, and you make a profit. That's not the way it works though in real life, because those are every piece of trading, right? Time frames, entrances, targets, and exits. Those are all great pieces of a trading model. But without a plan, those pieces are going to be done in random, right? Picture yourself as a driver. We all drive cars. You can get in the car, you can shift your gear, you can press the gas and the brake, and you'll go forward and backwards. But you might not ever make it to your destination if you don't have a map, right? If you don't have directions, if you have no destination, you'll never get there. You'll drive forward and backwards. You'll just waste gas. So many of you win some trades and then you lose those some trades. So you never make money. You never make it to your goal, whatever number that is, whatever number that looks like, because you've been um, I guess disillusioned. You thought that because you know how to win some trades, you're going to amass this mountain of money. And it's a lie. It's a lie. And all of you know it's a lie because all of us go to work. We've all worked for a number of years and we've not amassed any money. I mean, Sean does. Sean can go to work and he can save $100,000. He could be making 50,000. Everybody is not built like that, right? If you're a saver, you save money. But most people aren't that way. They go to work, they get a check, and they spend their check, on the things that they want throughout the week. And the next thing they know, they're broke a few days before the next check. Or maybe they're not broke. Maybe they saved, I don't know, some change, a couple $100, $100. And that works until you can do that 8 or 9 times. Now you have $800. You're going to spend that on something else, a vacation, a higher ticket item. So you're never going anywhere. You're stuck in that same bracket. It's not per se that you need to get richer for me, or you need to build wealth for anybody except for yourself. Maybe you're single and you'll be single the rest of your life. Nobody's ever going to see into your finances, but you're always going to be in that same bracket that your job pays you, because you don't understand how to grow your finances. You know how to make whatever you make and spend whatever you make and manage whatever you make, but you don't know how to grow it. So your future is a look in the mirror, because it's the same as your past. You're in that same area, the same level. Trading is no different. It's no different. Maybe you make $300 this week and you lose 400 next week. Then you win 500 and then you lose 200 the next week. You're going nowhere, and you're going nowhere fast. Over and over. You show up at the meeting, you socialize. This becomes the new club, like everybody goes to the club. The nightclub is fun when you first start going to it. Then you start seeing the same old people, they doing the same old stuff. And eventually you get discouraged going to the club. Trading is no different. If we have no roadmap and we don't do things intentionally, we end up at square one. So how do we change that? Like how do we fix that issue? And I believe that it's coming up with a plan, right? And it's not the static trading plan that says only take trades on the London shift between this time and this time. That's not what I mean. What I mean is, how do we come up with a plan that's going to propel us to the next level that we're trying to get to? Because I don't know what level you're trying to get to. I don't know what your overall plans for trading is, but you guys know that, right? We all have an idea of what we can do. We all have an idea of what we want out of this, whether we just want to trade for extra money, vacation money, school clothes, just to pay a bill. We have an idea of where we want to be, where we like to be. And everybody's idea is probably a little bit different. So I have came up with a plan that can get anybody anywhere. The problem is, when people hear it, it doesn't sound right, or it doesn't sound like it's sexy, or it's not enough. You're not busy enough, right? You're not in a trade. Your adrenaline is not pumping, or you don't get to press the buttons 1,000 times a week. And that's fine if that's how you feel about it, or if that's who you are or how you are. I don't judge you. It's people that go to the club and they stay in the club until they're 60. They go and have a couple of drinks. They come home. They don't bother anybody. They're good people. It's fine if we have people like that in the group. I don't mind that. All I ask is, if you're here and you're really trying to go to the next level, then let's get serious about going to the next level, right? You can be a scalper and make millions of dollars, but that's not going to happen without a plan. It's not. It's not. I mean, just like you can make $10,000 a month with no budget, and you'll never be rich. It's not going to happen, because you're out of control. You can't track what you're spending. You can't control what you're doing. And trading is the same way. When there's a lack of control, we can't maintain a balance in our trading account, because it doesn't matter how many times you win, you're going to get right back in the market and you're going to lose at some point. I ask multiple times, I say, do you believe that you're more successful with more trades or more successful with less trades? Statistics show you're more successful with less trades, but some of you might not believe those statistics. And that's fine, but you have to decide for yourself as the trader what you think is the best route. And then you have to plot a course to go along that route. Right? Like if you can't tell me what your goals are or how many trades that it takes to get to that goal, then I kind of have to side eye you because I don't think you understand how to get there or what you're doing. I think you're just kind of swinging in the dark. And I think that you're probably under this impression that you're just going to make it there. And I think that's a big lie. I think that if you don't have a plan, kind of like if you don't have a budget, then you're not going to make $1 million because you have to save. You have to pace yourself. You have to understand what you can and can't do. And if you trade the weekly candle, there is a clear plan in place. So I'm going to go to the charts and I'll kind of show you what I mean, right? We can go back last week. Can somebody give me a pair from last week that was on the weekly the weekly list? Bueller, anyone? I don't want y'all to say I handpicked it. I just want somebody else to go and look from last week and give me a pair. Brett.
I'm trying to help you, Todd. I'm trying to help you. I'm trying to go to the page.
Everybody else
The
must
one
be
for last
pissed.
week. Huh?
Everybody else must be pissed.
Why?
Some people getting their
Hold
toes,
on.
I guess. But I just want to I kind of want everybody to see what we talking about.
CAD JPY was one.
Thank you, darling, because I'm struggling with my
Which
phone.
one?
CAD JPY.
Okay, yeah, okay. Let's look at CJ. CJ from last week. Oh, that's the 2 week. Okay. If you had this marked up, it would not came to your zone, right? So I would have suggested that you not trade this. So in my opinion, maybe you would have. Let's just look at this. Okay, so if we're trading this order block, I'm going to expect a pullback into my zone, and then I expect a buy up. Let me see, what day was this? Thursday, Friday. So I want to see the price. I want to see price pull back to my zone, and then I want to see it go ham. Right now, do you know also why I'm not trading JPYs to the upside? I've said this to a couple of people, but you see these wicks right here. This is your what's the term for that? Intervention?
Yeah.
These are your intervention wicks from the Japanese government. So if you're over leveraging or you're doing something, you really don't have any business doing it. I get it, you shouldn't be, but people do it all the time. That one wick can destroy your account. So that's why I wouldn't be trading it to the upside, but that's just me. I would expect for this trade to pull back to my 50, right? 65 pips. The juice ain't worth the squeeze at 65 pips. So I wouldn't have suggested this. But if you were trading this pair, what I want to see on Sunday, Monday, and probably a little bit on Tuesday is price to push down first. I want to see a rejection at my zone. Then I want to see price push up. So if we go to the 4-hour candle and hit this play, price never pushes down. So I'm not interested in this trade. I'm not trading that because it didn't push to my zone. I would go and get another pair from the list. So is there another pair on the list? Britt said FJ pulled back to the 50. Is that what you traded, FJ, Britt?
No, I traded GJ.
Britt, you went ham.
I did.
I like what you're doing over there, Britt.
Thank you, sir. Thank you to you. Thank you to Kim. Y'all are excellent teachers.
Britt is handling her business. So in this case, right, your expectation on this weekly candle is for the trade to pull back to your zone and then it to go north. Kimmy, we got to have a talk.
What happened?
What's that?
What'd you say?
Oh, I was talking to Kimmy.
Oh, my bad.
Not you, little Kim. You're little Kim. Okay. So on this pair, Kimmy, I didn't realize this is a bullish order block. Did you realize that, Kimmy?
I don't remember. I know it messed me up though. I don't remember what
Yeah,
happened.
I didn't even look. Man, that's crazy. I just kind of took your word for it, but that's cool. Okay. So in this particular scenario, we had a bullish order block. We expect price to pull back into our zone, maybe even down to the 78, where we have an imbalance. But if you're trading this against the trend, you can only take the trade from where it is now to your zone, right? And this is what I try to stress to you guys. If I'm trading this to my zone, I can only take this trade to the 50 because the market is going up. So I can only trade the pullback to the 50. If it's not 100 pips, I always try to tell y'all, don't try to trade it if you're not going to get 100 pips. If it's 100 pips, by all means, trade it. If it's not, don't trade the pullback. Everybody get that?
Yes, sir.
Yes,
Okay.
sir.
So now when we hit play, we already have a bearish order block. The market is pushing down. It's going sideways. So let me stop it right here. So this push down, it didn't even get to the 50. So it's great that you didn't trade it. Once it came back up and broke this high right here, once it broke this high, that's the swing high, right? That's the swing high. Once it broke that high, you could have got in for the long. And you would have got in right here. How would you have gotten in? Right here at this golden zone, right? Or your 78. Whatever, however you decided. If you had gotten in at the 50, if you got in the 62 or the 78, all of that works. You would have had to cover this 100 from the bottom of this block. You'd have had to cover the 100, but you could have gotten that trade. However you got in was fine, right? And depending on your trading plan, maybe it's to ride it up to the clouds. The only thing that I caution you about your trading plan is if you never have any goals, then you never get out the trade. Your money goes up and it comes down. But if you have a trading plan and this goes 100 pips, you probably hit your goal. you probably flipped your account. You probably have people in here who trade funded accounts. And this 100 pip move could probably get them, I don't know, 8%, whatever percentage. If you're trading your personal account, it can get you an account flip. If you have $100 account and you traded $1 per pip, there's $120 that you made, and your account is now at $240. And you're finished on, what is this, Friday? You're finished on Friday in this case. You got in the trade on Friday and you finished Friday. So it didn't quite hit your zone. If you were savvy, maybe you would have caught the trade down here, but maybe you were not sure, so you had to wait until the trade breaks your swing high. It broke it. You got paid. That week is over. It took 4 days, right? It took 4 days for you to get into a trade, but you waited for what you needed to see. You took the trade. You won. That could have been a successful week for any of us because you did the right thing. If this had hit your zone, you could have traded it confidently back up. It didn't quite hit your zone. Now, I know many of us still could have found a way to enter this trade and for the buy if we were looking at it like that. But what I'm saying is it didn't hit your zone. You're not trading it down because it didn't give you a good enough pip count to trade down. So you wouldn't have worried about trying to trade it down. You should have just been looking to trade it up once it hits your zone. Maybe you would have had an alert set. Maybe this hits your alert, or maybe it didn't. Maybe you had your alert set right at the zone and it never triggered your alert, but you saw it break the swing high and pull back, which would have given you an entry on Friday, and you would have still made your money. So in this case, it took all week for you to get a trade set up, but it gave you your trade set up at 1,300 on Friday. That's crazy. And you took the trade and you made your money in 4 hours. The patient trader gets paid. You won this trade by the setup that you didn't have to go look for the order block. Somebody else, Ish, did all the homework you needed to do. They gave you the trade setup. All you did was wait on your cues and you got paid. Brett, you said EG? I really don't want to show nobody EG because I don't trade that trash.
I don't either, but it pulled all the way back.
But did it give you the pip count to pull back with?
I didn't trade it. I'm really just fibbing the candles so you can have an example to show.
Well, we know GU did what it was supposed to do. No, I don't see that's it. From this wick, is 91 pips. That's the trash. So I'll give you
Sorry, I'm gonna stop talking.
No, it's fine. It's fine. Let's look at GU. EU or G, because I know a lot of people traded these pairs. We traded off the 2 week. It doesn't matter if you trade off which order block. It could be a 2 week order block. It could be a 3 week order block. It could be a 1 week order block. That's immaterial. But the deal is you need to trade off the order block. Like this is a recipe for your success. Trade off the order block. We talked about these last week, and I asked a question in the chat. I said, hey, man, which order block gives you the best chance? Because we actually talked about this trade. And when I looked, I'm like, man, see the wick on this order block? Technically, price could just come up and tap that wick, and it's healthy price action, right? You fib that candle, you have your golden zone, you have your 78. This is still a good trade to your zone, but how many pips is that offering you? $77 pips. I'm not really interested. Do I think you can get 100? Yes, I do. Because I knew that price would probably pull down first and go up. But why guess? Like, why leave it up to chance? This is what I think. So I did not suggest that we traded this, right? The people that traded with me know that this was the trade that I suggested we trade, because I knew that price needed to come all the way up here wick to wick. And the runway was a lot bigger. Why was the runway a lot bigger? The runway was a lot bigger because this candle hasn't pulled back yet. And this is always a good indication that it's going to push down further and then pull up. So I knew that I had at least 164 pips to play with if it just turned and burned. But I knew there was a higher likelihood that it was going to push down first and then pull up. So all I needed to do was look over here to find an area that it was going to push down to, which is what we did. Actually, Kim did it, right? And we discussed that it was probably going to push down to this area. It pushed right to that area. Now, when it turned around, you had a pip count of over 200 to play with. This is how you go and you find which of those order blocks that Ish published gives you the greatest chance to make the most money. So for me, when I see 226 pips, I say, man, you can flip your account twice, right? Or you can get 2 entries in this. This gives you a great chance to be profitable. So if we kill this candle, and we replay it, and you drop down to the 4-hour chart, this is going to be what you see. This is where the trade is going to start from. If you look over, you can see this clear imbalance that we knew that price was going to come down and fill, or we had a high likelihood. This green line marked the order block down here. So if you got the order block, and then you got this displacement candle that pushed the market to the upside. So there's a great chance that price is going to fill this displacement candle and push on up. If not, it would just tap into this order block and push on up. So all we had to do as traders is just wait to see which one it was going to give us, right? What did you say, Isha? I don't understand. Okay.
I would have had messages and DMs about that's the order block. I know it's the order block, but they don't have any room. But hey, you want me to add it to the list? Let me add it to the list.
No, hey,
You know what I'm saying? I'm telling you, I get the messages and I'm like, look at the pips.
yeah, hey, I'm sorry if we run you ragged, East.
No, y'all don't run me ragged at all. But I don't know if it's just like we all is not really getting the concept of the order blocks, or because this is a swing traders group, so we are trying to get the most tips. But some people do, I guess, what is it, scalp or whatever, or short ones. So I guess they're like, we want all the order blocks. We want to see. Here you go, all the order blocks. But no,
Right, and this is a good time to stress that even after you publish your order blocks, I mean, I should already have done my research anyway. Like all of us we should always go look and see what setups we like as traders. So sometimes, you got a lot going on. You got kids, maybe you had family emergency, whatever. You had whatever going on the weekend. This is great that we have somebody in the group that voluntarily posts these order blocks. But we do ourselves an injustice if we don't go and look at them ourselves to see which trades are better setups for us. Now, y'all know I don't really trade USD pairs because of all the news, but I could not pass up on this setup because it offered so many pips last week. And when we went and looked, the setup was perfect. The market starts off, it gives you the fake move up, it sells down right to our area and rejects, right? So it doesn't matter if you get in here, wherever, it doesn't matter, because you have, if you look at this, look at the runway you have. If you got in way down here, you got 229 pips. That works. If you get in up here, you got 181 pips. That works. If you get in when it pulls back, you're going to see price is going to pull back. You got 224 pips. Like, it doesn't matter when you get in, right? Once the price rejects, I want y'all to think about this. If you would take if you had taken a bad entry and got in right here, you got to protect this swing low. That's 65 pips. That's a 65 pip stop loss. So if price pulled all the way back, you would have been 60% in drawdown on your personal account. You can't do this with a funded account. But you can, this is to me the benefit of trading your personal account. You get your entry, you got $100 account, $1 a pip, you pull back, your account is at $45. If it pulled back here, it didn't, but if it pulled all the way back here, it'd be $45. And then the trade takes off and you win. Nobody cares that you was $45. Nobody cares that you was a 65 pips in drawdown. It would be $35 or 65, but still, you get the concept. So let's look at price. Price pushes. When you go up, you broke this high, right? On the 15-minute. Let's say you're waiting for your hour break. This established a high. Price comes down, dips below, right? It dips below. Now you go up and break the high you disestablished. So on the 1 hour, that's your chalk. Now you just got to wait for price to pull back. You see it, it went up to this zone. It's giving you exhaustion. You want it to pull back. It pulls right back. What do you think that pullback is? It pushes up, breaks your high. This is the 1 hour chalk. It pulls back. Oh, 78. God, dog, that's perfect. How do you know it's going to be 78? That's how it works. If you would trade it from this low, if you had traded from this low, and you waited for that 15-minute chalk, price broke your 15-minute high. It came back. There's your 50. Get in the trade. So you could have got in here. You could have got in here, right? Maybe you wanted to see these highs broken. Once it broke that high, it broke it with a displacement candle. It pulled back into your imbalance. That's an entry for you on the ICT model, 2022 mentorship, slide number 3. Go check it out. This, you got in here, you got in here, you got in here, and you take price to the 50, you have a good week. You could be living your life at this point. After the entry, you don't have to watch this play out. You can go live your life. Price is either going to hit your stop loss or it's going to hit your TP. And in this count, you hit your TP. You won. Depending on where you got in, your prize is, 190, is 200 pips, whatever it is, you're done, right? This is what successful trading looks like to me, right? It's, if you've never done this, you're missing out. And you're done whenever this taps in and taps you out. You're done. That the week is over for you. And in this case, your week would have been on Friday, right? Friday or Thursday night, Friday morning. Your week would
Todd, was there a 4-hour OB created in the retest of it?
our OB creating a retest.
On the 4-hour.
Let me look. I'm sure it was.
Okay.
But I think that
Try to connect to that.
you see this order block right here?
Yeah.
Then the pullback.
Okay, yeah, I see it.
Yeah.
Okay.
So all I'm telling you is it's out there, man. Like the winds are out there in front of our face. And we're not we're doing everything we can to avoid them at this point, because it doesn't matter if an entry is slowing you down. Get with somebody about how to enter a trade, right? If these moving averages would have slowed you down, then once you got this candle close above the moving average, you could have entered that trade. I don't know what it is. I don't know at this point. I don't know what it is that's slowing you down. But what I understand is too many people are telling me this is not how I trade, but you're not successful. Too many people are saying that. And it just, it makes me want to scratch my head. If your math is not adding up, then you're the problem. Right? Like I do believe this is going to go higher. So maybe you told me, well, Todd, my TP was up here. It never hit my TP. Your TP should have been here because you're counter trend trading, first of all. Right? I do believe that price is going to go up there. I believe that this next candle is going to be a green candle. Right? I believe that we're going to get two pushes up and then sell off. So this is another thought. Maybe this week you want to trade the real move because this is a 2-week order block, right? Maybe you're want to trade the real move from here and your target would be these lows. There's nothing wrong with that. When price pushes up here, your stop loss goes above this high, right? And your target is here. And you go live your life until price hits that. I don't know when price is going. None of us know. Maybe it hits it, in May 10th. I don't know. But we know that price is going lower like that. This is a 2-week order block. It's telling us price is going lower. So maybe we take that trade from here to here. How many pips is that? Oh my God. How many pips? You see what I'm saying? Like your definition of success might be skewed. You might be the one with a skewed definition. Like, I don't know, but this is how the market works. On the higher time frames, the market is telling us that it's going down, right? The market came up, we broke this low. Since we broke this low, what do we have to do? Pull back. We pulled back. We came and we broke these lows. This is internal structure. We broke these lows. We pulled back. We didn't break that high. If you measure this move in this pullback, it's going to be what? A 70-something% pullback. And now the market is pushing down. This is probably where you should be targeting that imbalance. Whether it goes lower or not after that, that's an argument that nobody needs to have at this point. Because if you look at where the market is, just to this imbalance, that's 685 pips. This is what success looks like. Success looks like getting in the market when you're supposed to get in and getting out when you're supposed to get out. You're either capable of doing it or you're not. And I don't know really which one it is. Somebody who wanted to look at this? Anybody? Nobody wants to claim. Somebody said put USD Chef, the iPad person.
It's me, Susan.
What's up, Susan?
I'm good.
What's attractive about this to you? The order block?
Yes.
Okay.
And last week I traded it up and
You said last week,
yes.
and it was successful?
Yes.
Okay. I'm gonna give you some pushback on this pair because I just want to challenge the way that you're thinking right now. So, do you believe the more you trade, the more successful you are? Or do you
No.
believe less trades? Do you really believe that? I'm asking. I'm not.
No. I honestly believe that the less trades I have, the more successful I am. Honestly, I do, because the more trades I put in, the less success I honestly have had.
Okay, I believe like you believe. So I would ask you, last week this pair went 66.9 pips all week. And maybe last week was a bad week for this pair. So I'm gonna fib the last, or I'm gonna measure the last 2 weeks prior to last week. 137 pips on this red candle. And on that big green candle 2 weeks before, 100, let's just call it 140 pips the 2 week prior, and then this green candle of 69 pips. I don't like that. And 100 pips is enough to do my business. But I would rather fool with a pair that gives me 200 or 300 on a regular basis, because if it leaves room for error. It leaves like, what if I miss an entry? Do I have time to make those 100 pips? Does that make sense?
No, take that again.
Okay. Let's say I was expecting this trade to go down and press up. Is that what you were expecting here?
Yes, exactly.
So let's say it goes down and you don't trade it down. Did you trade it down?
No, I did not.
Okay. So you would have had your alarm somewhere down here, and your alarm goes off, and you wanted to take this trade back up to the top side. So the trade pushes down, and your entry. Geez, man, hopefully that wasn't it. This was going to be a nasty trade either way. So let's look at this. And Isaiah, we'll get to that in a minute, because I'm interested. I'm interested in what that means.
Okay.
Okay, so I'm going to play this candle so we can see how it fell the first time.
Mm.
Wow. Okay. That's hard. You see how fast in 1 4-hour candle
Yes.
popped down? You would have had to catch this entry. If you missed it, you can't participate. This is at 1 in the morning. Do you trade London's here? Or this was at 9 on Asian session. Do you trade Asian?
I actually got in this trade at 89858.
So over here somewhere. So you traded this for weeks. You held it for weeks.
Yes. Exactly.
Okay. Hey, if you're swinging it from a previous time, from over here somewhere, yeah, there's and this was your target.
89858.
89858. So you got in on this week, like in March.
Yes.
Yeah, that's cool. But was your target way up here?
Yes.
Okay. Because you had to get through this zone. Hey,
So that did not touch me, but I was quite intrigued to see the trade, honestly.
You say you was what? Intrigued?
Yes.
So listen, I think this is it's excellent that it played out for you, but I would question why you entered way down here for it to go up here. Like, ideally, you could enter here, maybe, and taken the trade up there if that's where you thought it was going. But you entered a week late when it was at a bearish order block. That was like brave. And maybe you just had a belief, or you knew the market was going up here, which is cool. But what I'm trying to say, the way we're trading or from week to week, like if you got in this and you held it for a couple of weeks, that's awesome. But if your entry is at an order block, the expectations is for it to tap in and then go higher.
Yes.
What I'm trying to get people to understand is, if you're selling this down, you have to TP at the 50. And if you're getting in for the move, You're going to have to have an alert set. You would have missed this move. And there's no way to get another entry once you miss that move. That's why you want to use a candle that gives you a longer range. That's why I like that. I would trade a 300 pip move faster than I look for a 100 pip candle. Because this 100 pip candle, if you miss that move, you got one chance. And if you miss it, it's over. Does that make sense?
Yes, it does.
This is a good
But
example
it was too fast. There was no way to catch it actually.
yeah, this is why I always ask people, why do you want to trade that pair? Because if you trade a pair with a small range and you miss an entry, you make one mistake. We're not perfect as traders. And sometimes we oversleep. Sometimes our entry is on London session. I would rather trade a pair that's going to give me an entry on London, and then it's going to pull back again in New York. And those trades that do that are the trades that go a greater distance. Does that make sense?
Yeah, it does.
All right, now Isaiah, what was you saying? Your comment about you believe traders see what now? You there, Isaiah? Okay, I'm just gonna read Isaiah's comment. In his opinion, he believes that everyone understands what they see and where price is going. The uncertainty is in the execution, like when to enter. And the fear of losing the trade stops a lot of traders from pulling the trigger. Long story short, focus on the direction and the location to enter the trade. Getting out is the easy part. There's a lot of truth in that comment, right? But this is why I'm addressing what I'm addressing, because when I work with people individually, most of the time people get beat up, right, in trading. So it is a fear of losing. We can't have that fear when our setup is setting up. All right, when our setup is setting up, we have to take the trade. The fear should be out of the trade because you control your stop loss and your take profit. And once you're in the trade, you don't control jack. You already set your take profit and your stop loss, right? So the discussion about fear should not exist once the trade is put on, right? Your trade is put on, you have a stop loss, it's going to stop you out. You already know prior to getting in that trade how much money it's going to cost you. Another reason why I suggest that you use $100. That is a negligible amount to most people, right? And if you're young or you're in a situation where you can't afford $100, use what you can afford, right? Use what you would spend on a hair and nails appointment. Use what you would spend on a pair of shoes. Most of us, when we go buy a pair of walking shoes, you're going to pay over $100 for them shoes. If you go drinking, you go to a club, you go out to eat, you're going to pay, half of $100. Yeah, I took my brother to McDonald's. So I stopped at McDonald's last time I picked Sean up from the airport, and his order was $17 at McDonald's. Let's not talk about Five Guys. So all I'm saying is that if we talk about this from the standpoint of $100 trade, you put $100 in your personal account, and you try this on demo if you must first. Try it on demo. You trade $1 per pip. When it pulls back, you're going to go and draw down however many pips that you go and draw down. So you already know if my stop loss is 22 pips, I lose this trade, I'm going to lose $22. If you can't sleep from losing $22, you're probably doing the wrong thing. You probably just need to go back to work, because trading is going to require some maintenance. It's going to require tuition, just like college does. Going to your job costs you money. If you drive a car to your job, you got to stop by that pump and you got to spend some money on that gas. So, guys, when you lose a trade, that's your gas money. It's your gas money for the market. And I get it. Some of y'all are under the impression that Hey, well, Todd, all I've been doing is spending gas money. And I'm telling you, damn it, this is how you stop just spending gas money. A lot of you have told me, well, Todd, I don't trade like that. Well, you should. Your way doesn't work. Your way hasn't worked. So just do it this way for a couple of weeks. I'm not picking the order blocks. Ish picked those order blocks and they work. So it's not me. I don't want your credit. I don't need your credit. It's not me. Ish picked the order block. Give her credit. She didn't create the order block. She just went and said, hey, these are the order blocks. All I'm trying to explain to you when I talk to you is this is how you can make money with that order block every week. And this actually works. What you're doing hasn't worked. You haven't figured out how to. I'm not telling you to give up on your dream of making that work or your life project of making that trading style work. What I'm telling you to do is do this that you know works while you work on that dream of yours. That's all I'm saying. So if you pick the trade and you know where it's going, right? If you maybe you don't believe in the way I'm doing it with trade it in demo, bro. Like I don't know what else to tell you. Put it in demo and test it out, right? This candle. If I go wick to wick on this candle, oh my God, 755 pips, bro. This went one direction for 720 or 755. It's got to pull back. This is my golden zone. I get in this trade, my TP goes in my golden zone. Maybe it doesn't reach the golden zone. Maybe it comes 600 pips instead of 755. Bro, that's 600 pips. This is the trade. Like this gives you the opportunity. So why would somebody go and pick an order block that went 32 pips or 115 pips? These are the questions that I get confused about, right? Like everybody, in my opinion, needs to be able to go and look and say, hey, man, I got a heck of an opportunity by trading this pullback. And maybe, you know, Todd is a little crazy. He's trying to get 300 pips. I'm just going to get 150 and be happy with that. There's nothing wrong. Like you know, I flip my account. You have $100 and you trade this pullback and you get 150 pips. Next week, when you show up, your account is going to be $250. Last time I checked, that's 150% gain. If you had $1,000, you would have $2,500 account. If you had a $10,000 account, you have a $25,000 account. You had a $25,000 account, you have a $70,000 or $65,000 account. The point is, trading is about statistics, right? And percentages. If every candle you get a pullback, right? There's a high probability that you're going to be successful trading that pullback if it gives you the room. It's a counter trend trade. So you have to plan on how you're going to attack this. You got to plan it. And if you lose, you already know how much money you're going to lose. It's putting gas in your car, guys. This, friends, this works. And let's just say you're not a counter trend trader. I don't have a problem with that. I'm cool. If you're not a counter trend trader, if you're just somebody who trades the trend, then you missed a great GU trade last week, but it did trigger your alarm when it hit that 50. Right? It triggered your alarm. Now you're interested. Maybe you didn't enter, but you say, hey, man, it hit the 50. I can pay attention. If it pulls up to the 62, Now I'm going to get in the trade and I'm going to protect way up there at the 78. It's a huge stop loss by most people's standard, right? The stop loss is 125 pips. So you can't take this trade at $1 a pip if you have a $100 account. You have to dumb down your lot size if you get into the 62. If you're a more patient trader and it pulls back further, then maybe you can take the trade at a higher lot size. If you know how to go in this wick and find your area of interest, or you know how to look for a chalk, a push down and a pull back, then you can enter that trade at the $1 a pip and cover less than that swing high. So it doesn't matter what level of trading that you're on. You can be a brand new trader and understand you got to protect the swing high of a trade that's going down or the swing low of a trade that's going up. And you'll be very successful. But you have to decide that you're going to do this consistently. Because the consistency is what's going to give you wins. Britt, how many weeks in a row have you won, Britt?
I mean, I lost badly last week, but pretty much the whole month of April.
Why did you lose badly last week?
Because I didn't follow my rules.
What did you trade?
GJ.
And what were you trying to do with GJ last week?
I was trying to get in on the sell. When
that was prior to the spring up. So you was trying to get in the sell, right? Of it going down here. That never broke it never broke lower, right? This sell. But you won the whole week of April. So when you lost last week, did you lose one trade, two trades? Or
I lost one.
You lost one trade. And you lost a fixed amount?
Yeah.
And then you just waited for the next week?
Yeah.
I don't think a lot of people do that. But that's another.
Yeah, I didn't used to do it either. And I had to be real with myself. Like the more, like you said before, and you've said a lot, the more that you trade, the more mistakes you make. And you think that you're trying to make up for losing, but you end up kind of just losing more. And it didn't really serve me. So I had to be real with myself and stop. I had to really stop doing the things that weren't serving me. So yeah, I only take one trade pretty much now.
There you go. And that's worked for you.
Yeah.
It's crazy. I mean, it sounds counterproductive, but that's how it really works. If you take one trade, right, you're going to win, man. You're going to win. And if I'm not mistaken, you're not even getting multiple entries. You're just getting one entry.
I'm just getting one entry.
That's crazy. So eventually, you're going to probably start getting more than one entry, but it doesn't matter. It doesn't matter. If you're just getting one entry, it's perfectly fine because you're going to win. And if you're trading a personal account, right? If you're trading a personal account and you're trading $1 per pip, you got $100 account, you're trading $1 per pip. You have a $200 account, you're trading $200 per pip. If you get a personal account and you trade these weekly order blocks, you're going to flip your account every week by trading $1 per pip. If you lose, you're going to lose a significant amount, but the next week you'll flip your account. If you're winning, if your win percentage is in the 90s, it doesn't matter if you lose. You're going to be right back in the box the very next week. Does anybody have a problem with the concept? If you lose that week, man, get in a demo or just go into the next week. Like, don't Don't try to fight the trades that week. The goal is to come out this week with more money than you started with. Then the next week you go in, you have a bigger account. If you're successful the next week, that's cool. Some of the worst things that happen in trading is you're gonna get in that. Let's say you get an entry on Sunday and it goes right to your TP and you flipped your account. And Monday ain't started yet. And then you got to sit there and you got to listen to Terry or OG or everybody else hooping and hollering in the chat. But your trade is over. You already flipped your account. Do you have the discipline to do something else? Do you have the discipline to mute the chat? If you know better, can you do better? Those are all questions that you have to ask yourself. And if you have a plan that you've seen, has anybody wrote down their plan? Has anybody have you seen it on a sheet of paper? How many trades it'll take you to get to your goal?
Yep.
How many trades will it take you?
It depends on the size account I'm using, but normally it's like between 3 and 5 trades.
So you mean 3 and 5 trades that week? Or are you talking about 3 to 5 trades overall?
3 to 5 trades overall.
So have you won 3 or 5 trades?
Yeah. I don't lose that much, but when I do, it's because I'm over leveraging, because I'm the over leverage king. So since I've been chilling on that part of it, I've been having more success. But the thing is, all right, I'm gonna go on a little tangent here. I think a lot of people are silent because the fact that they're scared they're gonna get flamed because they may say something that they think they should already know, and they're gonna get flamed about it. So a lot of people are silent and they're suffering in silence. But closed mouths don't get fed. If I have a question, I'm gonna ask it. Like I asked Kim, I say, Kim, is your entry method, is it mechanical? What does that mean, Isaiah? Meaning that whenever she enters a trade, is it the same way every time? And she's saying yes. So okay, so that was a light bulb moment. I was like, all right, bet. So looking at her trades and when she's explaining her entries, or when even Todd's doing it, Todd is entering the trades the same way every single time. He don't have to guess about it. So the nervousness is gone at that point. So if you pay attention to that, enter your trade the way that they both are entering their trades every time, you're gonna win. The only thing that you're gonna lose about is because of the fact that either you over leveraged or you got in on the wrong side of the trade. That's the only thing that can happen, right? And like Todd saying, you come back, but they don't trade with stop losses. So you can't trade like Kim and Todd if you're not on that level. Man, use a stop loss. And some people don't understand the depth of their stop loss. How deep should your stop loss be? Hey, you got to go based off of your account. If you trade with $50, you can't have 100 pip stop loss. You feel what I'm saying? So you definitely got to trade based on the level that you're at and at the size of your account. So that's all I'm saying. I mean, we got excellent teachers here. They're teaching us the way to get there. We're just not listening and we're not applying it the way that they're applying it. And if we just stop, pick a person that you really vibe with, you like that style of trading, go with that. All that other stuff, let it go. Just let it go. Focus on the person that's going to get you the bag because you understand that person. That's all I'm trying to say. I'm gonna get off my soapbox, but basically that's been my whole thing here. I mean, I've seen how everybody trade. I mean, I'm a good trader. I ain't gonna even lie. You know what I'm saying? I've been capping, you know what I mean? I can trade, but I just be sitting back just to see who and what be talking some BS about trading when I get in these groups. But you know what? They got some good traders here. Y'all need to listen to them. They're telling you how to trade. They're showing you how to trade. But are you really putting in the work in order to learn what you need to learn from them? Again, pick a person you can vibe with. that style of trading that you like, whether it's an ICT method, whether it's Elliott wave, if it's quarter theory, if all of it's the same, guys. It's all the same. You can call it whatever you want, but at the end of the day, you're getting in at a support and resistance level. And it's all the same thing. You can name it whatever you want to name it, but that's basically what it is. And if you figure out that, okay, wait for price to do what it needs to do before you decide to get into that trade, you're going to win every time. You're not going to lose. And if you find yourself on the losing side, all you got to do is just let price show you where it want to go. Okay, price is going up. All right, it's definitely going up. Okay, wait for a pullback. I don't care if it's at the 786, 886, it's at the 50%, whatever that is to you people or traders. If you don't understand what that is, you don't know what equilibrium is, you can't basically, what that is that's the middle. All right, so don't jump in the middle of a trade because that's the slaughterhouse when you're in the middle of the trade. You see it's already took off. You got to get out of that fear of missing out mode. Let it do what it's going to do. Let it pull back and then get into the trade. Once that trade take off, go ahead and find the next support and resistance line and wait for it to bounce off there, either up or down, and get back in. Break and retest, guys. Break and retest. If you just think about that, that's all you got to do. You know how the letter N is? That's what you need to go. Price goes up, price comes down, enter the trade, take off. The letter N, or a lightning bolt is what I call it. If you know what a lightning bolt is, or a letter N, that's all you got to do, guys. Look for that inside the trade. Basically, the price cycle. The price cycle is what? Consolidation. Wyckoff, as some people call it. Expansion. That's the impulsive move. You're trading the impulsive move. The retracement of the impulsive move is all you're doing. You're waiting for price to come out of that consolidation. Have you ever thought about a soda can? Shake up a soda can and you pop the top, and what happens? Boom, it explodes out the top, right? That's what consolidation is. That's where the BFIs, the banking and financial institutions, they are there. That's where they're staging all their orders and stuff. So that's where the order blocks come from. The order block, what is an order block? The order block is the candle before the impulsive move or the expansion. That's the order block. All right. So when that happens, they stacking their orders there in consolidation. That's beginning of the price cycle. All right. The expansion. After the expansion, you have the retracement. What's the purpose of the retracement? To fill imbalances. All right. So after price goes up, that retracement that comes down, it's looking to fill imbalances. That's what Todd's talking about, right? Okay, so if you're tracking, just keep tracking, listen. All right, so now the price don't retrace and it's filling imbalances, right? Okay, all right, so now it's coming back down to the point of where it originally started from, or the breakout structure. That's when you should be looking for your entry, because when price goes up.
Can you start showing that, because you're talking, but can you show on the charts like what you're talking about to people?
Yeah, you know what? I would love to do that, but I'm actually driving right now. But there will be a time that I can jump on the chart and I can show you exactly what I'm talking about. Because yeah, I get it. People need the visual. But you know what? So I'm gonna just go ahead and hold off on what I'm talking about. But if you learn the price cycle, you'd be good to go. But I'm gonna definitely show y'all if I have the opportunity to do so, or the permission to do it. Then I'll show you what I'm talking about, and then it'll make a lot of things simple.
Listen,
I'm telling you.
this is all you were saying. Can you see my screen, Isaiah?
Yes, sir.
Consolidation.
No, I don't see your
I see
screen.
you.
Oh, okay.
Oh, I don't see your screen.
Okay, hold on, y'all. Y'all kill me because y'all, all it is an order block. He's saying consolidation. Then you get the expansion, right? This is the expansion. Now price trades back into that area that it left the imbalance, and then you sell back down to where it expanded to. That's
Exactly.
Consolidation, expansion. Now the price retraces back into that area that it expanded from because it left an imbalance.
Right.
And then it's going to trade away.
Exactly.
That's
I
it.
get that. What I'm saying is why it's important to show an example on the charts of what you're talking about. Because, right now it's just words, so
Right.
what's an
Okay.
expansion? What does it look like? A consolidation, what does it look like? Like what are we looking at? Are we looking at a distribution like example? We looking at an accumulation example? We looking for trading the buy stops to sell stops? So,
Right.
just showing
You're right. I
people
feel you.
how it looks.
I feel you. He mentioned that price looks like a lightning bolt or an N. This is it. Like the consolidation right here, like the expansion, and you need to trade back to the area that it expanded from to fill the imbalance. So there's your N. It doesn't matter which way you put this in. If price consolidated here and expanded, it's going to come back to let you get in the trade, and then you can trade this back up to the top. It's all the same information. And I get it. He didn't give you a visual, but if you understand what you're looking for, then you can understand.
And can I say something, Todd, just to
I'm sorry, go ahead.
because I don't want people to think that price is gonna and I see what Isaiah's talking about with the N but it is more like M's and W's. Like, and if you've been on a call with me, you know what I talk about M's and W's, because price is not going to never go straight. I mean, unless it's US 30 or something. But it's always going to break a high and it's always going to pull back to get you in a trade. If you're patient enough to wait for the pullback, then
break
it
a
will
low,
start heading
or
in the
break a low,
direction.
right? You said break a high, or in this case,
Or
it can
break a high or low. Yeah.
and then it's going to pull. You said pull back and let you in the trade, Kim. You see it pulling back
It's
out?
going to pull back and let you in the trade.
Here's the pullback to let us in the trade.
Mhm.
Then we'll get in the trade to get to sell. So it doesn't matter if you're talking smart money, Elliott wave, dumb money, support and resistance, supply and demand, and all of this stuff has a term like this consolidation, right? It's called a distribution, right? All price is doing is going to manipulate these highs, and then it's going to drop. That's what happens in distribution. In accumulation, price is going to manipulate the lows, wick down, and then go higher. But hold on, let me TV is that high. All right. But what I'm trying to stress here is, even if we don't all understand the technical terms, or we don't all understand everything that's happening in the market, what I've tried to do with this group is kind of give a model that will get you paid, whether you understand it intimately or not. Which all that means is, once we see an order block, that we've already had consolidation. That's the base of that order block. That's either that red candle or the green candle. And then the expansion candle, the red or green candle, in this case, it's the red candle of the order block. Now it's going to trade back up to the green candle and then trade away from. All I tried to do is give us a way to make money off that move, even if you don't understand what's going on the inside of that order block. So by sticking to the plan, right? And the easiest way to do it is to fib the order block, get the 50, get the 78. If it's enough, if it's over 100 pips, you can trade back to the 50. If not, just wait until it gets there. Have your alarm set. Once it gets there, you can wait till you get your chalk. For me, I trade off a chalk. Kim trades from a zone. I want to see the price push down, break some internal structure, and then pull back to give me my entry. Then I can sell down, and my target would be this low or an imbalance that I've already scouted on the chart. Now, Isaiah said something that I want to go back and clean up, because he said I don't trade with a stop loss, right? If I'm helping you trade, I'm going to give you a stop loss, right? And generally speaking, that stop loss is always going to be the level of structure. If I'm trading myself, I trade with a hedge. But if I'm helping you, I'm going to say your stop loss is this point. Is there anybody who's confused? And I, you know, he also said about getting flamed. Guys, guys, in 2020, when I discovered this Forex thing, I paid Ruby 300 and some dollars every couple of months. And it was automatic, came out of my debit card every couple of months. You know, and I think I paid her $1,200 to learn the trade. And I didn't learn the trade. I paid $1,200. There's 28 people in here. I need to ask y'all a question. How much money have y'all paid me? How much money have you paid Kim?
0.
Ish. Anybody who's
Nothing.
ever given a class on this Zoom, how much money have you paid?
0.
0.
So when y'all talk about being flamed, I get confused. I get frustrated. I'm only human. I get frustrated. But I don't ever try to embarrass you, or I don't ever try to hurt your feelings. So I apologize if that's ever happened. And everybody who's been on a one-on-one with me, I think got value, right? And if you didn't, I didn't hear that you didn't. So as far as getting flamed, I think if somebody is looking at it like that, that is a bad way to look at it. That is a bad way to look at it. Because you can go on the internet and you can look up, I don't know, thousands of Forex people that help you with Forex, and 99.9% of them are going to ask you for some money. They're going to ask you for your debit card first before you get in their course or their mentorship.
Facts.
This stuff, man, is difficult to. It's a difficult journey to walk because we're not disciplined people. We're not a disciplined society. We think we are, but we're not. We go to church when we want to. We act godly when we want to, you know, and we diet when we want to, if we want to. We don't live off of a budget. This is the land of plenty, not scarcity. We don't have a certain time they cut the water on and we got to use the water, so we don't have to be home to fill up our water jug. We don't have to be disciplined, so we're not. So this is a very difficult thing for us to learn because it requires extreme discipline. Get in the trade when this order block pops up and the price pulls back. If you get in after that, you're going to get flamed. That's when you get flamed, right? Get in this trade when it pulls back 78%. Don't get in it way up there at the top because you're going to get flamed. You pay with your money when you make a mistake. That's the problem with trading. You have to be extremely disciplined. What we're trying to do is narrow the gap, right? And I know people always say, I don't trade this style, or I don't trade that style. I don't trade this style. And what I would suggest to everybody who thinks like that is to stop thinking like that. I watched a video, SMB Capital, and they asked that dude, hey man, what style of trading do you trade? He said, well, what style of market am I trading in? I trade all of them. When the market is conducive for me to hold a trade, I hold it. When the market is choppy, I scalp. When there's an intraday move, I take advantage of it. That's the true way that we need to aspire to get. That's the level we need to aspire to get on, right? We need to trade whatever is available because the market conditions are always going to change. And we're going to have to understand, hey, man, I can't hold these trades like I used to. But in the meantime, this model works. If I ask all 27 people on this call, which time frames are reliable, everybody's going to say the higher time frame. Now we're trading off the weekly chart. That's why the win rates are high. It's not because I'm great and I'm a great trader. It's because we're trading off the higher time frames. That's the God's truth. And if you understand that, then you'll take these trades with a degree of confidence. Understand this. I lose trades. I lost last week. I lost a trade. I didn't lose the week. I lose trades, not weeks. When you take your L, pack it up and go to the house, man. Hey, that was a good week. It might leave you with a stinging booty. Your booty might sting. Your ego might hurt. It's cool. Next week is a fresh opportunity. Lose a trade. Don't lose your account. Lose a trade. Don't lose your vision of the overall picture. There's a bigger picture. And that's what I wanted to show you and talk about the bigger picture. If you start with a $250 account, you win one trade. That's $500. Most people that, they're not going to get it. They're not impressed with $500 because they see it. They get paid $500. The next week,
we don't see your screenshot if you're trying to show it to us.
sweet baby Jesus, what is going on? Y'all see it now?
Yes.
If you start with a $200 account, 250, 500, 500 goes to 1,000. These are trades 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, right? Where are you on this list? Are you disciplined enough to win 5 trades? That means you took your account from 250 to 8,000. It took 5 weeks. It might take you a month to make $8,000. It might take you 2 months to make $8,000 on your job. This took 5 weeks. It took 6 weeks to make $16,000. Some of y'all, it take 3 months to make 16K. Some of y'all, it takes 6 months to make 16K. It takes 7 weeks, 7 winning trades to make 32K. I'm talking to y'all about weeks. This is trades. Y'all understand me? This is trades. This ain't weeks. This is trades. So when you become disciplined, when you can follow your price, you can actually win this trade on Monday and this trade on Thursday. And you start off the next Monday right here. Then you can win this trade on Wednesday and this trade on Friday the next week. Then week 3, you can win this trade on Monday and this trade on Thursday. These are 100 pip moves. Not the 200 that we get every week, 250. Last week, you get 226 on GU. This week, we're facing 300 and some pips on GJ. This is a 100 pip calculation. It's out there for the consumption of the group, right? Stop telling me you don't trade like I trade. Stop saying that. That's it's confusing. You don't need to trade like I trade. Trade to win. If your goal is to win, it's right there in front of you. I'm not saying that it's easy to follow the plan. Like your boy says, it's simple, but it's not easy. And the ugly truth is, this is the ugly truth. If you're not good enough to recognize 2 100 pips setups in 1 week, do you see two 100 pips setups in a week, Kim? Have you seen that before?
Wait a minute, what you say?
Have you seen 2 100 pip setups in a week?
Yeah.
I know it's a weird question, but some people don't, and that's fine. But some of y'all, many of you probably see 2 100 pip setups in a week. Many people see them. If you do, if you see 2 100 pip setups in a week and you see it regularly, you can clear 2 of these levels every week. So I can clamp this down. The first 2 I can accomplish in first week. The second 2 I can accomplish the second week. These 2 I can accomplish in week 3. These 2 I can accomplish in week 4. And then week 5, I can accomplish these 2. And you made $250,000 in 5 weeks. Stop saying you don't trade like me, because just win, man. Like, trade the plan and win. It's nothing wrong if you just take 1 setup per week. That might be what you have to do, because that might be where your discipline level is. Stop telling me I only trade indices. Stop. What I would suggest is only trade indices in your damn demo and trade the pairs for money. That's what I would suggest. Get great at trading indices in your demo. Flip your demo. Stop telling me I only trade gold. Stop. Trade to win in your account and trade that stuff that you're trading on the side in your demo. There's nothing wrong with that, guys. But help yourself first. If you see 100 pip setup, you graduate to level 2. If you see another 100 pip setup, the next week you graduate to level 3. But if you get in your real account and you start trading your favorites because they're your favorites and they're not on the list, you take your account from level 2 back to level 1. And now you got to face that daunting task of being disciplined again the next week. Right? You're on high because, hey man, I went from level 1 to level 2 on Monday. I got a high, but I don't have a discipline enough to sit out until the next week. So I'm going to take another trade. And now I lost. Oh, I'm going to try to get back what I lost. Now I lost more and I'm back at level 1. Bruh, 10 weeks to $250,000 on a $250 account. If you got a $100 account, it'd be a little bit longer to $250,000. This is your personal account at this level. This is not a funded account. This is your personal account. Trade to win, guys. Like, don't trade because this is your favorite pair. Trade, I mean, listen, do trade your favorite pair in your demo if it's not set up, like if it's not an order block and it's not been published and you don't know exactly where it can go, right? It can go one way or the other, or it's just bouncing from zone to zone. Trade that in your demo. And then trade the other way, trade the wins in your real account. People are spending their hard time, you know. Selena used to do it. She used to give us the order blocks. She passed the torch. Isha's kind enough to take her time and print them order blocks. I know this week it probably took 2 hours to list all them order blocks. And the guys playing trades. And she posted. All we have to do is look at them after she posted them and say, hey man, this is the setup I'm taking. Get in the trade. If you have an entry problems, man, look at YouTube videos on entries. It's 1,000 different videos, because I know I speak on my entry method exhaustively. I believe Kim does too. And maybe we're not saying it in a way that you understand it. Go to YouTube and look at Forex entries. Hit enter. It'll be 1,000 videos that pop up. Some of them are 5 minutes long, or some of them are very in-depth. Your entry is your entry, and make it yours. Only enter that way every time. Entries are forgiving more on your personal account because you can afford to go in more drawdown than you can on a funded account, right? Everybody that I've talked to that's trading a funded account right now, most of them told me they can't make $2,000 after 3 trades on their funded account. Most of them have told me after 5 trades, they won't see $8,000. And none of them told me that they'll see $250,000 after 10 trades. Have no clue how to get there. The thought process is, I can make 4 or 5 grand, which is awesome. Until they don't pay you or they go under or whatever the case may be. Or they say you went in drawdown 5.2% and then they take the whole account. The beauty about this is this $250 is less that you have to pay for a 100K funded account. Do y'all get it? I mean, do y'all see what I'm trying to say?
Yes.
Bro, this is out here for everybody to participate in. Like, I would love to go down to Miami and hang out with everybody for like a week. Or New Orleans or wherever, Go to Thailand, go to Colombia. None of that is possible if we don't have a plan that will get us from point A to point B. If we can't put our ego down for a minute and say, hey man, maybe this is the way I should do it until I have a more successful way of doing it. I'm not the best trader in this group. It's people out there probably right now that can trade circles around me. It's people out here for real, for sure, in 5 years that will trade circles around me, coming out of this group. This is only our beginning. This is our hangout. This is our club, our bar, our golf course, because we're traders. There is no. If you live in Dallas, you can't get in your car and drive down to the traders bar and hang out and talk trades with anybody. This is where we can come do that. This is where we come exchange ideas. This is possible, guys. Like, this is for real possible. And thanks to people like Isha, people like Selena, we don't even have to go find our own setups. They bring them right to us. Swing Traders channel on the Discord. They put it right in that Discord channel. All we have to do is have enough discipline every Friday or Saturday to take 15 minutes to look over those order blocks and look at which one of them has the propensity to pay us the most money. I like to pick 2 or 3 just in case the one that I look at doesn't do what I think it's going to do. Because if a trade does not do what I think it should be doing, I'm not trading it that week. I'm going to find something else. Because we're in control. Does everybody know what they're trading this week? Does anybody need help? It's free. Help is free, man. It's free.
That's a beautiful thing, man. Appreciate y'all.
Do y'all have any questions? All right, guys. I kind of feel, I don't know. I feel like
Hey,
this.
Todd, I have a question for, I guess, the group. I agree with everything that has been said today. Um, all of what was said matters. And I'll guess I'll just share my experience trading so far. I started trading about like 3 years ago exactly. And for 3 straight years, I was lost. I did not know what I was doing. It did not matter what strategy I was using. I did not understand the direction of the market. I did not understand that at all. It wasn't until this year that I watched a YouTube video that clicked for me on market structure. And I guess my question is to the group, does everybody understand market structure? Because sometimes we'll get on the call, like on the beginner's call on Friday, and Kim might ask someone like, hey, mark the swings. And some people will still be confused on it. And that's like such a huge, that is, in my opinion, like the basis of being able to trade, like not actually knowing where the market is going. Does everybody understand where the market's going? Because it doesn't matter if your entry's right. It doesn't matter if your strategy's good. If you don't know where it's going, it doesn't matter.
No, they
So
don't.
yeah.
They don't.
Because
Everybody doesn't understand.
if you're going in the opposite direction, you're gonna get cooked.
Yeah, like that is huge. That is huge. And if you don't understand it, like please say something. Cause I traded for 3 straight years and I didn't know. I traded Todd's strategy and it didn't matter. I wasn't successful trading it because I didn't know which way the market was going. I was confused. So it's like if you're confused, please speak up. Please, like you can go from being confused one day to knowing it the next day. Seriously, but you have to say something.
I think that's the biggest hurdle in trading is the market structure. And I'm glad you said you saw a YouTube video because everybody, like, even though I try to explain it and I know Kim teaches it, some people aren't going to understand it from me. Some people aren't going to understand it from Kim. You have to go and go find your tribe as far as somebody who explains something in a manner that you can receive it. Because I didn't understand market structure until Pips of Persia did that 3-part market structure class.
I
Right?
remember you showed that one to us, and I didn't get that one either.
Right.
And I was like, why don't I get it?
Well,
So like what you're saying, find
you,
what works for you. Like
you gotta
literally
find a
go
way.
and find one. Yeah.
Exactly. Because everybody doesn't understand the way somebody explains it. And that's whenever I say that, I think people don't understand what I mean. But people aren't going to understand from some people. I can say it until I'm blue in the face.
Yeah.
That's why I even asked Kim to start teaching, because I feel like I get up here on a Saturday and I try to break it down, but I can only say it the way I understand how to say it. And I knew that half of the people didn't understand what I was saying, because whenever I ask for feedback, it's always like a blank, a dead space. So show your charts. Yeah, I agree.
Yeah. You should pick someone, Todd. Pick someone
Well,
random to pick
and
to
but
market.
if I start doing that, I think people feel like, I'm
I
intimidating
mean,
them.
that's what we do in the beginner call. Kim will ask someone like, hey, just mark these swings and we'll help you out with it. It's not judgment. We're not judging you. We're here to make each other better. That's why we gather every week.
I
So
agree.
does anybody want to show their chart or mark on Todd's screen to show where the swing points are? Does anybody want to do that if you're confused? Because we're here to get better.
See, that I
So
mean,
I'm gonna say something, and anybody who knows me knows that I say when I say mean girl stuff, it's usually out of love, right? But and I just know how when I started trading and I was on the calls with Ruby or whoever I was learning from at that time, I was 90% of the time on the calls on my phone and then on my computer, marking up as they're talking to try to understand exactly what they're talking about, right? And I know, and I wanted to be able to, whenever that person said, "Can you hop on the charts?" Well, we know that wasn't gonna be Ruby, but in other groups that I was in, if they say, "Hey, who wants to hop on the chart?" I'm raising my hand. I don't care how stupid I even thought I looked. Okay, because when I didn't understand, and I needed to understand. And in order for me to understand, I need the visuals. Just like Ish just asked earlier, like you got to show me, like just telling me and just talking and just giving me a bunch of words doesn't help me. My brain doesn't process that way. So my recommendation to you is when Todd's on these charts or on the charts, get on your computer, do exactly what he's doing so you can understand exactly how he's moving, right? When I'm on the call, so you can understand, even Monday through Thursday, when they're on the calls, be on your computer, be on your chart as well, so you can understand exactly how they're moving. And whatever you don't understand, because you'll know what you don't understand if you're sitting on the chart, trying to figure it out, trying to figure out do what they're doing. You'll understand what you don't understand, and then you'll be able to ask the questions of what you don't understand. I understand that some people don't ask the question because they don't know what they don't know. But if you're on the chart trying to mark up, like Todd, like Elfie, like whoever is doing the classes at 5 p.m., if you're on your chart doing the same thing, you'll start to understand what you don't understand. And that's my soapbox. Sorry.
Thank you, Kim. Not mean girl at all.
Thank you, Kim.
You're welcome.
And I think that
Pretty cool.
I think that since Kim has started teaching, I think we've had more people to gain understanding, which is all I ever wanted anyway, right? I still think there are a lot of people who still don't understand. You know, I'm always going to say that.
Okay, then Todd, I got a question for you. The only thing I don't understand is what the heck is imbalance?
Well, okay, I'm going to show you, but before I show you, I'm going to ask you a question.
Go ahead.
How many YouTube videos have you watched on imbalance?
Maybe 3, and they confused me more than I was, so maybe I didn't watch the right ones.
Okay, I'm gonna give you my definition of an imbalance, right? And in order for me to do this, I'm gonna have to draw a candle, right? This is a candle, right?
Right, I'm following you.
Okay, I'm gonna clone this candle. There's another candle. I'm gonna clone this candle. So before we even start discussing the imbalance, I need you to understand that you have to have 3 candles to start talking about candlestick relationships, right? Every three candles are in a relationship. Okay? They all connect. They all need to connect. So if you had 2 boyfriends, y'all all need to connect, right? So when you look at these candlesticks, what you want to see is you want to see the wicks of these candlesticks have a relationship with each other. What that means is the bottom wick of that first candle. Let's say this was the bottom wick of the first candle, right? The bottom wick of this first candle needs to have a relationship with the top wick of this third candle. So they need to all touch. Does that make sense? Cherry, yay or-
Man, okay, yeah, that's I got it now. I'm like, how the hell they keep seeing this imbalance? But that made perfect sense. So if the wicks are not touching,
yes.
Then if the wicks are not touching, then that's the area of imbalance in between that.
Exactly. So you see this?
Got it.
You see
Slick.
this red candle? You see this red candle right here? This first one?
Yes.
You see the bottom wick? I just drew a line under the bottom wick. This third candle right here, it should have went up and touched this bottom wick. But since it didn't and the market fell down, we know that sometime in the future, the market is going to have to come back up and close this imbalance.
Got to clear the space and make that connection.
Yes. And that is exactly why when we look at a weekly order block, it's just a candle pushing down. In this case, this was a 2-week order block. The candle pushed down. If we go back and we look at this on the 2 weeks, we're going to see that it's just one red candle. But this is why I say when we fib, we got to find the 50%, and we find the 78. And within here, you're going to find an imbalance that this price is going back up to. You tracking?
That makes so much sense now.
So now you see this is the 50 and this line is the 78. Look at all this imbalance right here. This wick did not touch with this wick, right?
Right.
So it's a good chance that this is where price is going. This top wick and this candle don't even have a wick. So it's a great chance the price is going there. What do they say with candles with no wicks, Kim? That should be like
that's a Nawaf teaching, but price is going to come back to feel for the inefficiency of no wick.
And that's what I expect to see the next week. I expect price to come right up to this imbalance and then turn around and sell. And that is why those of you who I was on that one-on-one with yesterday, and we saw this daily candle, I told you that this next candle is going to be a green candle. It's going to be a bullish order block. We need to get through this order block. If you listen to the Persia dude, Pips of Persia, he tells you that when price approaches an order block that hadn't been violated, it needs to create another order block below it to bust through. So that's exactly what happened. Price came up. It's creating an order block. This next candle is going to be a green candle. We're going to go up here to mitigate this imbalance. That's going to line up with that 4-hour candle with no wick. So you're going to see this price push up, take out that candle with no wick, which means it'll mitigate this imbalance. It might come to the 78, and then it's going to turn to sell. So that's what imbalance is. And the importance of understanding what an imbalance is every imbalance is not equally important. The imbalance that's in the candle that breaks structure, those are the important imbalances. In this level right here, you see how we got structure, and then we get the imbalance in the candle that breaks that structure? Y'all see that?
Yes.
That's why price came right here, closed the imbalance, and stopped. We're going to go through there, but these imbalances hold more weight than a regular imbalance, right? And when I say a regular imbalance, this structure was already broke. It created this level. This candle broke that level with imbalance, but price didn't come back and bounce off of it. Structure was already broke with this move. This structure was already broke. Price fell, but the important imbalance are the ones that are they're on the levels of the structure break. Those are the ones that you focus on when you start trading. If you get higher time frame order blocks. Higher time frame order blocks. If we on this 4-hour chart, this is a higher time frame order block. I can mark this order block up. If I can go down and find an imbalance on the 15-minute chart, when price taps in at that 15-minute chart, I can take a trade back down. I don't want to confuse y'all. Y'all know what an imbalance is. Any other questions? If you never ask, I'll never know that you're missing information, and I'll never know how to give it to you. But sometimes, even if I know what questions you're asking, I'm not going to be able to explain it in a way that you can digest it. That's part of our communication problem in America. It's part of what's going on in schools. Some kids don't receive information that their teachers put out because the teacher doesn't put it out in a way that is compatible with the way that child understands. So the child never gets the message, never gets the instruction, and they never complete their learning process. And schools are rigid, so they don't switch up their teaching styles to accommodate those kids. So we call those kids dumb when they're not dumb. They don't learn that way. And it's the same with this platform we're on. You're not dumb. You just don't understand the way I'm putting it down. All right, we got a question. So does that mean price must rejoin the gaps in price that are considered imbalanced? Yes, that's exactly what that means. Now, you use a term called gaps. I wouldn't use that term because there are gaps where these candles don't connect. That's called a gap. In this case, we have candles. We have on the third candle, there's no relationship between the every third candle. And that is an imbalance. I wouldn't call it a gap, just call it an imbalance. But yes, when there's an imbalance, eventually price has to come up and close that imbalance. And when we say close, there are two definitions to closing an imbalance. Price doesn't have to close it completely. Price can go up halfway, close half of that imbalance. It can go half of that imbalance, and that is considered closed by virtue, they call it consequent encroachment.
Todd, I'm going to be 61 this year, and July 13th, I'm canceled. I've been in and out of the Forex market for the last 10 years. I'm a network administrator for the last 40 years. I've purchased training videos, lots of money in training videos, and I have never gotten the explanations like I've gotten in this group. Kim and you guys are extremely valuable teachers for this group. And then if people doesn't understand, they need to ask the questions. And I could tell you right now, the things that I learned in this group right now with all the training that I went through from Kim, the beginners courses, you didn't get it from none of those that I paid money for. And they don't teach you what you need to know, especially the traps that the market makers are making for setting up for us to fall into. They're not teaching us that in the paid groups. So you guys are doing a very good job. I could say that. And question I want to ask you, which I haven't heard yet, I haven't saw a video yet from you guys. How can you detect the traps the market makers are making for us? You know how to do that?
Yeah. So first of all, I appreciate it. I think you have to have an understanding that this was a trap, right? You have to have an understanding of what you are trying to accomplish, right? So most of the time you get trapped because you're looking at a lower time frame move, and there's also a higher time frame move that's in the same neighborhood or associated with your move, right? So if I go back to the 2-week chart, we expect for price to buy up. We know that this is our golden zone, and we know that this is our 78. So why does price go right up to our 50% and start selling? It didn't just, it sold aggressively. The people who are a part of this, you see how it taps in and it aggressively sells. Let's look at the 1 hour. It tapped in, it aggressively sells. This aggressiveness creates FOMO. And what does people start doing? You start hopping in for the sale. Look at that candle. I guarantee you it was probably thousands of traders that thought that this was the sell, right? Price pushed down, it pulled back up to your zone. If you're just paying attention to this level, if I fib from this level, man, that's a 78% pullback, 88% pullback. This is a great trade setup. Let's jump in for the sale. This is a trap. This is a trap. It's a trap for smart money. It's a trap for whomever. If you're only looking on these lower time frames, this is why I stress you have to be aware of what's going on above you time frame wise. Because when you hop into these trades, which is a perfect setup on this 1 hour, oh man, I don't swing trade. You're in the weeds. This is in the weeds. So this is a trap. It's a 78% pullback, an 88% pullback. It's a high probability setup. In most people's minds, they can take this trade back down to equal lows. This is never going to make it. This aggressive candle that sold down, it wicked this low. If I go watch ICT video number 3, this would tell me that this low got taken out. This is going to trade back up into this imbalance, and you can get another short. And this market probably is going to double bottom right here. So that short right there is going to play out. But this higher time frame pull down, that's never going to happen. It's trade is going to go up. This trade is going up. But if you're only looking on those lower time frames, you get sucked in to only believing what you see on that lower time frame, not understanding that the higher time frame set up 2 weeks ago that the price needed to pull back up here. Does that make sense?
Yeah, that makes sense. Understand.
This is not just here. I think we see this a lot. I remember a GN trade that was the same way. I know me and Marv and a few other people, we traded, and they had an inducement level before the level that price comes to. So when this price comes up, there's an order block right here, right in your golden zone. It's a daily order block, which is a powerful order block. Price is going to reject from that order block and start selling. So it makes it look like, hey man, price is going to sell from here. Well, it did. It did sell from there, but it only took out the daily liquidity.
Is there also an option that an order block becomes invalid anymore?
You said, is there any way other option? It has to get ran. Like price has to go above that order block to invalidate a bearish order block. And it needs to go below a bearish order block in order to invalidate it.
What I mean to say is how much time the candle got to touch the order block before the order block becomes invalid?
I don't believe in that. I know what you mean. So most people talk about order blocks. They tell you that when price taps it and trades off of it, that's as many times as you can trade it. What they should tell people is you're not guaranteed multiple touches. This level, this order block, this supply zone is not going to hold forever. What they should tell people is you're only guaranteed the bounce on the first time. We don't know how many orders are in this area. We don't know how many orders are pushing the market up. So you should only bank on that on that order block one time. That's what they're telling you. That's what they're saying. I don't think that you can go around with an arbitrary number in your head saying, okay, this order block is going to be good for two bounces. This order block is going to be good for 3 bounces. I've never seen or heard of an explanation that tells you how many bounces that order block is good for. If it holds, it's good, and if it doesn't, it's not good. What I would tell you is, if you're trading the higher time frame bias, and that higher time frame bias is taking the trade to your 78, and you get in the trade down here, you just hold your trade, it's going to eventually press through this order block. So we bounced off this area twice. I want to say Friday. If I go down to the 4-hour, there's 2 taps. There's this initial tap, then it tapped again, and price fell away. Now you're going to get the run through probably on tomorrow or Monday. You're going to get the run through. And it's not going to be as smooth. Maybe a candle closes here and it goes up, and you get another order block on the 4-hour that presses us through. But you're going to get the run through, and eventually it's going to run up into this imbalance. And this is where the smart trader is going to look for a reversal. And all reversals aren't the same. They don't all look the same. Maybe it's going to give you an M, a double top. Maybe it taps and it pushes down aggressively and breaks a level of internal structure, and then buys back up and gives you an entry. Maybe it comes up in here and it does a Wyckoff pattern, a distribution pattern. It gives you a high, it pushes down, it gives you a higher high, it pushes down, and then it gives you an up thrust after the distribution, your third high, which takes out both of those highs, and then it goes. I don't know. Like, nobody knows what pattern is going to form. But what we should understand is this is where the market is going to turn around. The market should not violate these highs. Where's my cursor? These highs right here. The market should not violate these.
I have one more question here, Todd.
Yeah.
Do you know how to make the EAs?
What do you mean?
Robots?
Oh, no. I'm not a I'm not a programmer.
Okay, no
And
problem.
you know what? We had a guy in the group that said he did, and unfortunately, I think he stole people's money.
No, that's what I want to try to learn as well. I want to learn how to, because all the setups that you're looking for right now, I want a robot to go and do all of that, and then come back and tell you, okay, these are the pairs you should take for this week because of these setups. It found. That's what I'm looking for.
Yeah, that would be awesome. And you know, honestly, I don't even know how to articulate that to a programmer. You know what I'm saying? All I would be able to tell him is, hey man, there's an imbalance right here. I want a robot to tell me to trade back up to that imbalance. I don't even know how to articulate that to somebody who can write code. Hey, you know what? We have a guy in the group, Prince Pips. If anybody ever talks to Prince Pips, he can write code. He can code robots. Do you do coding? Do you are you familiar with that?
I'm not familiar with the creation yet. I've gotten and downloaded all the books that I need to learn it with, because if you go to pdfdrive.com, you can download a whole bunch of books that teaches you Forex and whatever you want to know for free.
Ah, okay. If you look up this guy in the Discord, Prince Pips, he is he's familiar with how to code like EAs. I've talked to him a few times, and I know we were supposed to get together and talk about it more in detail. Whenever I get down to Atlanta, I'm gonna have a sit down with him about that very thing. But I'm dumb when it comes to that. I'm a true 50-year-old.
Well, if you can get an EA that can actually do all the checks and balances for you, even go and check the news and everything what's going to happen for the week, and then give you an analysis that what will look like a good trade for you, then most of the hard work is done. All you do is mark up your charts based on the analysis for each of those pairs. Then you
That's-
don't really have to trade any specific. I mean, what you're doing, you have your pairs that you like, but then the EA will tell you from all the different pairs which ones will be good for this week.
Right.
So
The
it
best fit.
expands your trading capacity.
That's true. That's 100% true. I mean, I hope you can figure that out, because that would be awesome.
Well, I'm going to be working on that, but I want to understand all the different things because, like I said, I've been in trading for 10 years. I got thousands of books and stuff. I got videos. I got 6 4 terabyte drives with videos, training on everything. So
That's
like
crazy.
I'm a collector basically on knowledge. I'm IT, computers. So, I'm trying to make a program that can do what I want, because we purchased a robot from other person, and because my son is Mitchell Peterson, he's in the Discord. He introduced me to your group.
Awesome.
So I'm looking for a way to make an EA that will do the analysis of all pairs based on what we are learning now here in this group, as well as gathering the news, go to the websites and gather the news, create a report. And then based on that report, then when you look at it on Saturday and Sunday, say, okay, this week is coming, and then these are the best pairs that the robot picked, and then you trade it manually. I don't want a robot to trade, because that robot that we paid $1,000 for,
Uh-huh.
we lost. We blew the account for us.
Oh, man.
So,
Yeah, I'll be mad.
I'm not trusting anything to the robot because it doesn't work.
Yeah, you're
Or
right.
it's not programmed correctly. One of the two.
Yeah, I would be mad if it blew my account, but I understand what you're saying, and that's the future, man. Like EAs and robots are the future. And to me, it's all the more reason why you need a rigid plan, because I guess in the 80s and 90s, you traded directly against the best traders. Well, now you're going to be trading against robots. They're going to do the right thing every time. So you have to be on point when you get in and out of these trades. And to me, the higher time frames are the time frames that are the most secure. Them robots can make anything happen in a 15-minute chart, 5-minute chart.
The robots can find the entry point exactly where it's supposed to be.
Yes.
And get into the trade and out of a trade faster than you can think. And that's what the robots does. But the robot can't predict how the market is going to flow so easily, neither, unless you got a really professional analysis program that can do it for you. And you're not going to get those robots so easily, because those guys that got those robots that makes them billions of dollars, they're not going to share it with nobody.
That's true. That's some great info. The Forex market is what they say, $7 trillion traded every day. So the money is available. The money is in the market. So you have to be on point. You have to be willing to pull the trigger on your trade and to get out once your trade hits your stop loss or your take profit. Don't go back in gambling, hoping, because robots and stuff, they're not going to hope and gamble. They're gonna execute.
One more thing, Todd. Your account with the broker, is it an ECN account or is it a regular account?
Yeah, it's an ECN.
Okay. And what is the minimum that you can invest on an ECN? I mean, your balance on your account gotta be the minimum.
I don't know. You know, I think you can have it as little as $50.
On an ECN account?
Yeah, I mean, I don't know. I think the Osprey FX will allow you to put in $50 a trade. It's probably less than that. But you know, since we have to use, I have an unregulated broker, but we have to use Bitcoin to deposit into your account. So like you don't want to deposit anything less than the gas fees. Does that make sense? It's going to cost you more money to send a deposit to your account than it is for you to trade your account. But I think the minimum deposit is $50 for most brokers.
Yeah.
Does anybody know for sure what the minimum deposit is?
It normally states on the website.
Yeah, I don't remember seeing a minimum, to be honest.
Depends on which.
I think there is a
broker.
minimum. I've smoked my account down to $38, you know, multiple times. So it's at least that little.
On a unregulated or regulated.
Osprey, the ECN broker, Osprey. It's unregulated, but even yours.
Yeah, you can get it down to like $2, $3.
But how much are you asking for? How little you have to trade or deposit a minimum deposit?
How much money an ECN account can you can open an ECN account?
It would be on the website.
On mine, I know the ECN is 500, but you could do the micro with as small as $20.
It's pretty low, whatever it is. It's pretty fucking low.
Who do you use, Terry?
Say it again.
Who do you use? They require $500 for you to open an ECN account?
Yeah, that was the LQ DFX. But like I said, you could do the minute with $20.
You gotta do at least 30. Because me and Terry use the same broker, but I think for Osprey, it really don't matter how much you put in there.
So somebody just sent me the information. Thank you, good. It says 25, minimum is $25 to $50.
And those are regulated accounts, regulated brokers, right?
No, this is an unregulated broker.
No, I want a regulated broker because once I get started in Forex, I want to really.
So listen, I know of a regulated broker, the ECN account, and I know you can start it with as little as $100. Fusion Markets out of Australia.
They are regulated.
Yeah, they're regulated.
So that means you can make $1 million a day and pull it out one time.
Yeah.
Because the unregulated brokers, man, they give you hell to get your money out sometimes.
I've never had a problem, and listen, I know you're correct. That's people's fear, but Ruby, I know she pulled out 200K twice from Osprey, so I get it. Maybe I would be uncomfortable if I had $1 million sitting in an unregulated broker, but if you're making 100K, I wouldn't feel uncomfortable. But Fusion Markets, and you're not in America, so you're fine, right? Americans can't, we can't even trade Fusion Markets, but I can, but Americans can't. Okay. So if you're not a US citizen, then you're fine. If you have a different ID, like from a different country, you're fine. And you can just, you go through their KYC, they're going to verify. And in my case, it was a Colombian citizenship, so I'm good. I trade through that broker, and I have no problems. I just use a VPN on my phone, and nobody's any of the wiser. But if You know, and I know for sure $100 is fine with that broker. It's an ECN account.
And they also export in crypto.
Yeah, crypto. You can use your debit card. And there's one more way. I think you can even use a wire or whatever
Wire transfer to the bank.
to the broker. That broker is in Australia. So if you can probably go on the website and look it up. I can't even access the website unless I turn my phone's VPN on.
All right, I'm gonna investigate it and check it out.
Yeah,
Thanks,
Fusion Markets.
Okay.
All right. Do you guys have any other questions?